Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Andrea in Warba, Minnesota.
Hi, this is Andrea from Warba, Minnesota, and I'm wondering if it's a good idea to obtain life insurance for my daughter, who is 6 years old. Thanks. Love the podcast.
Thank you, Andrea, for submitting your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
This question can be fairly passionate in terms of the different responses that you get. I typically side on the side of no. We have 2 kids and, we don't have life insurance for either of our kids. Policy Genius, one of our partners, actually wrote a great article on this. And I think we can put this in the show notes, and I'll cite quote that one of their CFP said in a second here. But I say no to this question because, if we think about, the way we work with our clients is, our job in life, in my view, is to help our financial planning clients grow and protect income, grow and protect net worth while keeping their goals in mind. So the protection here is what we're talking about with life insurance and the financial plan. It's a good defense. Now, typically, life insurance for kids doesn't really make a lot of sense because it's unnecessary because you don't rely on your kids financially unless they're like a child actor or something like that. So there are a lot of policies that are geared towards kids that aren't necessarily term. And we are big believers of term insurance. I think 95% of the cases out there, term insurance makes a lot of sense versus whole life, which typically has a cash value component, an investment component with a protection component. But these policies are going to be typically 5 to 15 times more expensive than term.
Right.
So I think for some parents, they're thinking like, hey, is this potentially a good investment for my kids? And I think that's where a lot of insurance agents will say that it is. It's not. You're typically better to put that money into a brokerage taxable account or a 529 or something of that sort. You can use a policy for your child to cover funeral expenses and things like that. The premiums are going to be really, really low. And, one of the things it does is it protects, your kid, their insurability. Unless they have a medical illness, that's not really, they could have a medical illness. That's not really a thing either. So if this is something that's really important to you, I think I would probably go an alternate path versus, buying an individual policy for your child. A lot of employer policies, employer provided group policies do have a buy-up feature where you can cover spouse or even dependents. And sometimes that's for $10,000 or $50,000. And typically that's going to be enough to cover things like funeral expenses. Again, you're not replacing their income or anything like that. So that's not necessarily a worry. Or you can also potentially add it as a rider to your own individual policy. So, you have $1 million 30-year term life insurance policy. You can potentially call up your carrier and say, hey, this is a rider that I want to add. Maybe you pay a couple dollars more per month, and then your dependents have a small policy if something were to happen to them. The quote in the article, so this is from Patrick Hansel, who I've worked with personally, with a few client policies over the years. He basically says in the article, a lot of life insurance agents sell child policies as a great investment or perfect place to save money for education costs in the future. However, these policies should never be used as a primary source of college savings or funding. These policies take many years to accumulate value and oftentimes won't even have a break even when cash value available for loan is greater than total premiums by the time funds are needed. So I think these are often sold on the emotions of a parent, like, hey, what can I be doing to make sure that my child is set up for the future or they're protected? Life insurance, in my opinion, is not that vehicle. So I would definitely look elsewhere, in that regard.
Yeah, I think Tim too, and I agree. Jess and I, we don't have a policy in place for for our kids. I think your advice was spot on in terms of, for those that this does have significance or meaning and they want to have some peace around the topic. I think there's alternative pathways. I think too, it's just a good reminder. One of the things we often talk about is the importance of making sure you've got your own personal solid financial foundation in place. And I think really taking a step back to say, before you even consider a policy like this, hey, what's the emergency fund look like? What's, the other, and are there other opportunities or things that you would shore up before you even would consider a policy such as this? And then remember, as we always talk about with insurance, doesn't mean they're bad people, but you have to remember the incentives that might be aligned with the purchase. And so really the responsibility is on you, or perhaps working with somebody like Tim and our YFP planning team that can really help vet whether there's a need here. And then if there is, as you go out to shop and purchase a policy, here we're talking about one type of insurance, but of course we've talked about others many times on the show, whether it's life, disability, professional liability. Once you determine that need, you then got to go shop in an educated manner, in a way that you understand what you do and do not need, so it fits in with the rest of your financial plan. So good stuff. And I think this, as you mentioned, taps into an emotion that we don't typically see a topic of insurance causing a whole lot of excitement or enthusiasm. But this one lit up the YFP Facebook group, is, I think, for the reasons that you mentioned. And hopefully it's getting people to think about this topic a little bit further, one we haven't talked about on this show before. And again, taking a step back to say, what's your own personal financial situation look like, and making sure you're getting some good insights and education along the way. And just another great reminder that for those that are interested in having a financial planner or financial coach in their corner to work alongside them to be able to vet questions like this, we would love to be alongside of you on that journey. Go to yfpplanning.com. You can book a free discovery call and see if we're a good fit for what you are looking for. So thank you again to Andrea for submitting your question that we featured on this week's Ask YFP CFP segment of the show. And as a small thank you, we're going to be sending Andrea a super comfy YFP t-shirt. And we would like to hear from you. If you have a question, please go to yourfinancialpharmacist.com/askyfp or shoot us an email at info@yourfinancialpharmacist.com. Have a great rest of your day.